Crude oil gets hammered. Before we start, a quick word from our sponsor. This video brought to you by XNest, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The West Texas Intermediate crude oil market has fallen a bit during the early hours on Monday as we continue to see a lot of noisy and shaky behavior. Keep in mind that there are a lot of concerns about demand, but with the Donald Trump and Republican election in the United States, there's a real possibility that the United States starts drilling quite drastically. One of the number one provisions of his government, or goals, I should say, is to make the United States energy independent and dominant. Most traders don't know this, at least most retail traders don't know this, but the United States has enough natural gas alone to power the world by 300 years or so. In other words, we may see a lot of supply flood the market in the future, and I think that's part of what's going on here. But at the same time, quite frankly, the West Texas Intermediate crude oil market likes bouncing around in $10 ranges. We are approaching pretty significant support at the $65 level, so I do think the downside, at least in the time being, is somewhat limited. The Brent market looks very much the same. $70 underneath will be your support level, while the $80 level above will be resistance. If we break down below $70, it could open up a move down to $65. This is yet another sign of concerns about global demand. But when you look at the market itself, this is an area that we have been testing for about a year and a half and did several times before that. So I think sooner or later it's a technical signal to start buying oil again. But right now it looks like we need to drift a little lower to get to that point. I would not be short of oil, just simply because there's no point in chasing the trade. My name's Christopher Lewis. I work for FXEmpire. If you enjoyed the video, give me a thumbs up.